Hey everybody, hope everyone's doing well. This is the Emini review for Friday, July 12th, 2024. Because it's Friday, we'll look at the weekly chart and go over that first. And as I've been saying, we've had this tight bull channel, but possibly three big pushes up. 1, 2, 3. And the problem with three pushes up, we have possibly exhausted bulls. It's three big pushes, it's three smaller pushes, it's a nested wedge pattern. We're expecting some sort of correction, and there's probably resistance not very far above where we currently are. So there's an increased risk that if we do trade above this week's high next week, there's probably more sellers above, and we may fall below this week's low. But it is two consecutive bull bars here, breakout and follow through, and not a good sell signal bar on the weekly chart. And then coming into the day on the daily chart, we had a classic big up, big down, big confusion, overlapping bars. It's a trading range, and so traders are buying low and selling high. Now on the daily chart, it looks like trend bars. We have a bull trend bar, a bear trend bar. But when you crack open the bar, you don't know. When you look at this chart, you don't know the details of the smaller time frames. And then, of course, when we look at the smaller time frames, like the 5-minute chart, we can see the details. And obviously we have this big rally, big sell-off. So this entire, even though it looks like a bull trend and a bear trend, this entire range is a trading range. Now with that said, again with the daily chart, the daily chart, I drew this on the weekly chart as well. We have three pushes up, and you can see the market is attempting to break out of a bull channel line, which is resistance. In general, there's a 25% chance the market gets the bull breakout of the bull channel line, 75% chance the breakout fails within 5 bars, and then we test the trend line, which could be this line. And again, coming into the day, big up, big down, consecutive buy climaxes, and then a big outside bear bar, probably sellers above and buyers below. So with that said, coming into the day, we'll draw yesterday's high and yesterday's low. The day opened with a small gap up, and we opened at the top of the trading range, which was the second half of yesterday, and bar 1 was a trading range bar. So we have a trading range bar, high in a trading range, probably more sellers above and buyers below. But buyers below for a scalp because you're in the upper third of this trading range. Bar 2 tested lower and then went above the high of bar 1, but did not close there. It's a bull reversal bar, not ideal for bears, limit order bears selling above, but also not ideal for bulls because we haven't really broken out of the trading range yet. This could be a high 1 at the top of a trading range, which traders would prefer to sell. But because it's a bull reversal bar closing near its high, again, it's not an ideal signal bar for the bears. Bar 3, there were sellers above, and we have a bear reversal bar closing on its low. So what about selling below bar 3? Some traders will. You can say it's a wedge to the top of a trading range. We rallied on bar 80, pause bar, gap up, pause, and then rallied on bar 2, and now we're getting a reversal bar. So there's a stop order short below bar 3. Good signal bar, 3 pushes up, high in a trading range. It's a reasonable trade. And then we went outside up on bar 4. So any bear who sold below bar 3 got trapped immediately on bar 4. And now bar 4 is an outside bar and a bull trend bar closing on its high. In general, outside bars are trading range bars. They're expanding triangles. So in general, you would typically not want to buy the high of an outside bar because you're expecting resistance. It's basically a trading range bar on a smaller time frame, and you know that in trading ranges, traders are selling high and buying low. So there might be resistance above, and we may come back and test lower. But for the bears who shorted bar 3, bar 4 is not what they wanted to see. Bar 4 is also breaking out of all the bars to the left here, this entire trading range. Now it's the first bar to break out, and it's only breaking out slightly above bar 3, and the bulls still need follow-through. And then they got follow-through on bar 5. So if bar 4 wasn't that much of a problem for the bears, bar 5 is becoming more of a problem. It's not the greatest follow-through in the world. It's a smaller bar than bar 4, but it is a bull bar closing on its high. So now that the bulls have a breakout and follow-through, more bears will exit above bar 5, and more bulls will be willing to buy, betting on the breakout. At this point, it's still not a great breakout. These are good bull bars, but the follow-through bar is much smaller than the breakout bar, and that's a mismatch. It's better to see uniform size bars, kind of like over here, these bars, uniform in size. This one became a little more climactic. So it's not the greatest example, but even this pair of bull bars, that's a good looking pair of bars. Context aside. Here, less good when it's an outside bar and then a smaller bar. But still, think about the bears who shorted down here. The market is trapping them further on bar 5, and that's a problem. And then you can see on bar 6, we rallied even further. So now we have bears exiting above bar 5. We have more bulls buying above bar 5 and buying small pullbacks. Now this rally is strong enough for a second leg up, and it's breaking out fairly far above the top of the trading range. So we might have a new breakout here. The high of the trading range, if we come back and test it, will act as support. The high of bar 3 will act as support. The low of bar 3 will be support. That's all, of course, if we do get back down there. But for now, the bulls are doing a good job trapping the bears. And think about the bulls who doubted the breakout here. It's an outside bar. I don't want to buy high in a trading range. Small follow through, not ideal. Now the market's starting to run away. So you have bulls and bears both trapped out. And that's what provides fuel for a second leg up. 3-bar micro channel and big enough breakout. And the context is decent. We're breaking out far above a trading range. That there's probably buyers below and a second leg up likely. 7, another bull bar, but it's a doji. But there's no bear bar yet. So this is still a spike from the low of bar 4 to bar 7. Bad low 1 short below 7, probably buyers below. There might be sellers above, but if you are selling above, you're probably a bull taking profits. The problem with bears selling above bar 7 to get short is that this breakout is strong enough for a second leg up. And we don't have to stop above bar 7. And the bears know that. So they'll wait to see maybe a trend line break and then a second leg up before they look to short more aggressively. Remember what I said coming into this day. I mentioned that a couple days ago and yesterday, big up, big down, this is a trading range, and I showed it on the 5-minute chart as well. And I drew yesterday's high. And so this entire range between these blue lines could be the range of the entire trading range. So bears might not sell until we're all the way up here. And this is a decent rally. We're probably going higher. 8, going more to the upside, another bull trend bar. 7's a pause bar, so some traders will count that as a separation between legs, leg up to bar 6, then a pause, then another leg. But the reality is this is all a micro channel. We have no pullbacks, and this is a spike. It's probably buy the close, buy for any reason, and scale in lower. Stop below the breakout. Bar 8, a bull trend bar, closing above the prior bar. It's a fairly good breakout. We have a lot of bull bars moving a big distance. Lots of bars closing above the prior bar's highs. And what do the bears have? Where's the selling pressure? We have a decent bear bar on 3, but that's all we have. And all through here, the bears really don't have anything. So they're going to wait to sell higher and wait for more signs of selling pressure. 9 continuing higher, another bull bar, closing above the prior bar's high. The spike is continuing to grow. There's probably buyers below 9, scaling in lower. Inside bar on 10, it might start to pull back soon. We're going inside. The market is contracting. So this breakout is range expansion. Now the market's contracting. The range is getting smaller. Bar 10 is within the range of bar 9. You can call bar 10 a high 1, and it's a strong breakout. There's probably buyers above bar 10 and buyers below bar 10. And then we finally pulled back. On bar 11, we fell below the lows of the prior 2 bars, but not the 3rd bar. That's a sign of strength. It would have been worse for the bulls if this bar fell below bar 8. But since it didn't, we had buyers below these bars. It's all good. It's a fairly shallow pullback. Testing the high of bar 7. Bar 7 was a trading range bar. So I said it wasn't a great sell, but some traders will sell above that bar. And then if they did, they got trapped, and then we came back down and tested it. The high of that bar then becomes support, and that's why we bounced there. Now we have a technical high 1 on bar 11, but since it's the spike phase of a bull, and it's a fairly strong breakout, and we're not necessarily high in a trading range, it's not very clear if this is going to be the top of the trading range or here or all the way up here, and enough momentum up for a second leg, which we haven't had yet. So this is a high 1 that traders will probably not sell above, and they'll rather buy above it. Sideways on 12 is a trading range bar. It's a pause bar. The market's going sideways, pulling back sideways. That's a sign of strength. Sideways pullbacks are strong. Probably buyers below 12. And as far as sellers above, I would not sell in this context. There's really nothing to sell. There's not enough selling pressure. We have this strong rally, then a pullback, really shallow pullback. We're probably going to get a second leg up. 13, bull breakout. It's a strong bar, closing far above all the bars to the left. Probably the start of the second leg up. And then follow through for the bulls. So breakout and follow through. Still probably buy the close, buy for any reason. And the market's probably going higher. This breakout strong enough for its own second leg. And this entire rally is so tight, it's probably one leg. Even though there's a breakout or a pullback below this bar here. 15 going even higher. Consecutive bull bars and uniform in size, closing on their highs. Really strong for the bulls. What's happening, the market is racing to some resistance level. We don't know exactly where it is. We have an idea that it might be the high of yesterday. That's a common resistance area, a common price that gets tested. And again, keep in mind, we are expecting sellers above yesterday's high. It's an outside bear bar. So look at the daily chart. Do bulls really want to buy above that bar after they were disappointed with, we had this micro channel, this rally, and this big outside bear bar? The odds are if we get back up here, there's sellers above. Disappointed bulls and bears looking for a second leg down. But for now, strong rally, nothing to sell, probably going higher. 16, another bull bar, closing on its high. Buy for any reason, but This is going on for a lot of bars, and even if it's a lot of bars, whenever you get a bear bar closing below its midpoint in context like this, it's good to just get out below it, because we could easily crash back down and test the moving average. So I'd exit below a bear bar closing below its midpoint, but for now, really no reason to sell. Getting a smaller bar on 17 might start to pull back soon and go more sideways. Again, it's 2 legs up, but the entire rally is strong enough to be 1 leg and have a bigger second leg similar in size to this. Maybe a leg 1, pull back, leg 2, maybe a measured move of the initial spike. But my biggest concern with resistance above is the high of yesterday. So here's a spike, measured move, depending on what you use. Maybe the low of bar 4 to the high of bar 9. That takes you close to the high of yesterday. But here, getting a smaller bar, getting pullbacks intra-bar, might be 3 pushes up on a smaller time frame, which would likely lead to a minor reversal, not a major reversal. Bear bar 18, it's a small inside bar, probably sellers above, but probably buyers below. It could be the start of a pullback, and the market could pull back for a couple of legs and test the moving average. Outside bar on 19. 18's a high one, but now it's after a second leg, and fairly high if you consider this the entire trading range. Now we're getting more to the upper third of the range. So now we have an outside bar, 19, probably sellers above. There might be buyers below, scaling in lower. Breakout on 20, closing above all the bars to the left, maybe 1, 2, 3 pushes up. The third push isn't symmetrical in size, but it is 3 pushes, and again, fairly high in the range with resistance not far above. We'll probably get there with all the momentum. This is still expected to get a second leg, but we could pull back first. 21, another inside bar. It's a trading range bar. So you can see the market is going more sideways here over the past 5 bars compared to what it was doing here and here. That's a sign that bulls are being less willing to buy. They're taking profits, reducing risk. Think about if you're buying. Think about the trader's equation. If you're long up here, your stop's all the way down here. Your 1-to-1 is all the way up here. If you're expecting sellers above yesterday's high, that's not great. It's probably not a 60% chance we're going up here. So bulls who are long here, stop down here. They can see that their equation isn't great, and they are reducing their positions, maybe looking to buy pullbacks instead. Remember that trends get weaker as they go on. So this was the strongest part. This was also strong, but now we're getting a couple of legs to the upside, high in the range. Bulls probably prefer to buy pullbacks at this point. What about the bears? The bears don't really have anything to sell yet. They have bar 18 and bar 3 today, so not a lot of selling pressure at all. By the close of bar 18, there's an 80% chance we've seen the high or the low of the day. And at this point, it's more likely, of course, that we've seen the low of the day and probably not the high of the day yet. Also, there's a 20% chance that bar 1 remains the low of the day in general. But in this case, of course, with what we've gotten, that is probably more like 60% at this point. And as far as day structure goes, right now we have a small pullback trend and a bull trend from the open, but the problem with it is, again, the daily context. Big up, big down, probably sellers above yesterday's high, and we're getting there rather quickly. This could be a buy vacuum test of resistance, and I don't think this buying will be sustained all day. This is unsustainable behavior. Very strong buying, but probably sellers up here, not far above. And more likely the market will go kind of similar to what happened yesterday. The most likely event is it's a strong trend and then goes sideways. So most likely strong trend and then goes sideways. And then a little less likely, but more likely than a bull trend for the rest of the day, is that the market rallies finds resistance and then reverses. But the odds that this entire rally gets reversed today is unlikely. Bear bar 22, higher high double top with bar 17 maybe, but not enough selling pressure. This is a continuation pattern. Traders will buy below 22 and scale in lower. But 22 is the type of bar that bulls who are buying all the way up, they might get out below 22 and look to buy lower because we could come back and test the moving average. Doji on 23, not a good buy signal bar. 3 consecutive bars without a bull body. It's a high one, but now the market's going more sideways. The bulls less interested in buying the highs, more interested in buying pullbacks. Bull bar 24, but possibly a buy vacuum test of this small trading range. You can see we're testing the high here. There might be sellers above. And then 25, we had a bear bar, 2-bar reversal, double top. You can call it a wedge. 1, 2, 3. I'll draw it. 3 pushes up. You can see it's really minor. You're not expecting this wedge to come back and correct this entire move. It's really a micro wedge. And so what you're expecting, at the very least, and we're already basically there, is a test of the low of the last leg, the low of bar 23. We're probably going to get there. And then we'll probably come back and test here. So we have a spike in channel trend. Probably come back and test the low of bar 19 and have an overall trading range. But again, we could pull back deeper and test the moving average. I think bar 25 is certainly enough reason for bulls to exit and look to buy lower. It's still always in long. This is not flipping it to always in short, but the reality is we're probably going a little bit lower, and bulls would rather reduce their risk and sell out of their positions and buy them back lower. Inside bar 26. So now we have consecutive inside bars. That's breakout mode. So II pattern after a wedge. It's breakout mode, probably sellers above. There might be buyers below, but they may not come in until the moving average. 27, a small bar. Not great for the bulls because we're still inside this trading range, and we could easily have what happened on bar 24 happen on 27, where there were sellers above, sellers on the close of 27. 28, a disappointing bar. It's a high one, high in this tight trading range, or bull channel. Probably sellers above, and probably going more sideways to down. Another doji bar, 29, probably more sellers above. This is not what the bulls would prefer to buy the highs of. This is a bull channel, and bulls will buy below bars and take profits above bars. But this could be the third push. This could be 1, pullback, 2, pullback, 3, and then of course we could come back and test the low of 19 or even lower. At this point, the low of 19 is near the moving average. And then we had that vacuum test on 30. Bar 30, bear trend bar, a little bit surprising. It's a vacuum test of support. Bar 30 is not enough to flip the market into always in short. As strong of a bar as it is, it's not enough to undo this. It is a strong enough minor reversal to break the trend line, that's for sure. Very tight bull channel. Trend line break, we went sideways. We're getting a breakout to the downside, but we still have to get through the moving average. The bears still need follow through. If bar 31 looks exactly like 30, that could be a problem for the bulls, but everyone's waiting to see what the follow through looks like. And then it's disappointing, and disappointment is the hallmark of a trading range. I want to say one more thing while I have this trend line drawn, and that is what the bears are hoping for is some sort of major trend reversal here where we have a bull trend, we have a trend line break. We still need a retest of the trend's extreme, so we'll test probably somewhere up here, maybe get a higher high, maybe a double top or a lower high, and then the bears are hoping for that double top to lead to a major reversal. I'm not sure this is enough bars yet to undo all of this, But maybe if we had like a three-legged rally to test the highs and it was really weak with a lot of selling pressure, and maybe it was another 10 bars or so, that might be enough. But even still, 40% of major trend reversals actually succeed, and 60% lead to trend resumption or trading ranges. Bar 30 was enough of a surprise for a second leg down, so there's probably more sellers above bar 31. 31 is not a very good buy. It's not a very good signal bar. It's basically a doji, sellers into the close and following bar 30. Like I said, probably sellers above. You think about the bulls who were buying below bars. Maybe they bought the low of 19, betting this would be the bottom of the trading range, the start of the channel, and then we broke straight through it. So now we're pulling back, testing that price, probably going to fall for a second leg. Even if we rally a little higher, think about bulls who bought up here. Any of these breakout points, there's disappointed bulls above. And then we got a second leg down on 32. Bear breakout, pause, second leg. Technically, there's no pullback. This could all be one breakout, but some traders will even view it as 3 legs, down on 25, pullback, 30, 32. It is 2 legs down, and again, traders are looking for the follow-through after bar 32, but after the weak follow-through after 30, they're not expecting very much. And then look at the context. Very strong rally, probably buyers below all the way down. And then 33 is another disappointment bar for the bears. So we have a sell climax, disappointment, sell climax, disappointment. At some point, the bears who sold up here are going to take profits. And the bears who sold down here, 32, they see 33, they're going to be disappointed and look to buy back shorts as well. Probably buyers below 33. It's a weak, low one in bad context, and a couple of legs down, probably in an overall trading range. And it looks like bears who were disappointed with 33 bought on the close, and we got a bull bar 34. 34 is a low one sell signal bar, probably buyers below. It's a bull trend bar. Bad stop order means good limit order. It might be so bad that we may not even test down there, and instead we might get a pullback of the bar and then rally. And then instead of even pulling back, traders bought the close of 34 and we rallied on 35, consecutive bull bars. I think if you were short for any reason, it's wise to get out above 35, 34 and 35 strong enough up for a second leg. You had bears selling above 33, betting it's a micro channel. This is all one leg. Any pullback should lead to a second leg down. And that's valid. But now this is strong enough that there's disappointed bears below, probably buyers below, and a second leg up, likely. Also keep in mind, this entire rally is one leg. This could be a more complex pullback before a bigger, more symmetrical second leg. Maybe a leg 1 equals leg 2 measured move, which could be somewhere up here. I'll draw that so I can get rid of this leg 2 measured move. So 57.09. Doesn't have to be perfect, that's about it there. Pulling back on 36, you can see where 36 tested. We're testing the high of bar 33 and finding support. So think about what I said. 33, sellers above, disappointed with the 2 bull bars. Any pullback leads to buyers below, and the high of 33 becomes support. And we had buyers into the close of 36 after it tested the high of 33. Second leg up likely, and it's nested. This is strong enough for a second leg, but also the big picture. This is strong enough for a second leg up. Pulling back a little further on 37. If you're a bear, you might be hoping this is a triangle bear flag. And you're hoping that this breakout was strong enough to lead to a second leg, maybe down here, maybe get a measured move of the triangle, test lower, maybe test the bar 11 low. The reality, when you compare the bulls to the bears, this bear breakout is choppy. It's got this consecutive sell climaxes with bad disappointing follow-through bars, and you compare that to the bull breakouts, which were much stronger, the odds are this is a pullback or an overall trading range, and we'll probably come back and test the bull trends extreme at a minimum, and this will be an overall trading range. 38 could be the start of this small second leg up, but the big second leg could have started on 33. Bull bar 38, probably going at least a little bit higher, probably buyers below. 39, it's an inside bar, not a good sell signal bar, so probably buyers below. Traders will argue it's 2 or 3 legs up. Again, bears hoping this is a strong enough breakout. This is a 2-legged pullback, and then we sell off for a second leg. But again, when you compare the bear strength in this breakout to over here, this is really not ideal for breakouts. The bears couldn't even get minimum follow-through after bar 30, which is the absence of a bull body. Never mind consecutive bull bars, and then you compare that to this rally, a much stronger bull breakout with consecutive bull bars closing on their highs, uniform in size. Another inside bar on 40. It's a reversal bar, but it's a trading range bar, probably buyers below. Not a very good low 2 short. It's a low 2, but probably low in a trading range. And then everybody bought the close of 40. We have a bull trend bar 41, probably going higher. Bears will argue 1, 2, 3 pushes up. The third push is climactic. But think about where we are. We're testing breakout points, that is true, but we're probably going at least to the high of the day. And if we're going higher and we see this bull trend bar, which is telling us the market is looking to go higher, does it make sense to sell here if you think it's going here? Probably not. So the bears are stepping aside. The bulls are buying for at least a scalp. And then 42, follow through, so breakout and follow through. Context isn't great. You look to the left, we're still inside this trading range. So this could be a maybe 2 or 3 legs up buy vacuum test of resistance. Now the bears are hoping, like I said earlier, this is a major trend reversal. Here's a strong bull trend line break, and then here's the retest of the trend's extreme. I mentioned that the thing with major trend reversals, you want the retest to be weak. So if you're a bear looking to sell this, look at the selling pressure in the retest in here. The bears have 1 bar, 36. The rest have been dojis. And the bulls have consecutive bars here, all of them closing near their highs. This is not ideal for a major trend reversal. And so 43 could even be a 2-bar reversal, bear bar closing on its low, and that still would not be a very good major trend reversal swing setup. So the bears, they know that. They see the selling pressure has been weak, and we're probably not stopping here. We may pause here. We have bulls who bought up here, disappointed by this deep pullback. They'll probably sell out of longs. We might pause, but we're probably not going to have a major reversal here. 43, we're pausing, but probably not. There's probably more buyers below 43. This is strong enough for a second leg up. Remember, this is still strong enough for a second leg. This could be the start of it. And remember, this leg 2 measured move. Keep that price in mind. We could go all the way up here. I think at a minimum, we're going to test the blue line, yesterday's high. Bad stop order short below 43, probably buyers below. As far as selling above, I would not. I think this is too strong. We're probably going at least a little bit higher. Another small bar, 44. Traders are unsure at this point. We're getting small sideways bars. But when you think about the bear case and the bull case, there are arguments to be made for both, where, like I said, there's bulls who got trapped in here, and we're retesting it, so we may bounce and go lower. But think about the bears hoping for the major trend reversal. We're still not getting bear bars, and that increases the chances we'll just continue straight through the bull trend's extreme and go higher. 45 bull breakout. The bulls still want follow through, but we're breaking out above the prior bar, or the prior trend's extreme on 45. And then follow through 46. Not ideal. It's an inside bar. It did not close above the prior bar. Prior bar's high, 45's high. But it is a bull bar. The bears, what do they have? really nothing. This is a tight bull channel. This is strong enough for an entire second leg up as well. Another bull bar, 47. So there's really not enough selling pressure to be selling here. Even if you are expecting sellers above yesterday's high, you need to watch the price action because price is truth. And you can't trade what you're hoping for. You have to trade what you're getting. And at this point, we're getting another small pullback rally. There is an increased risk, I think, as we get above yesterday's high. The odds are there are sellers above, and we might be getting into leg 1, leg 2 territory. We know that measured move is up here, so there's still room. But as strong as this looks, it could simply be a buy vacuum and a climax testing resistance, the top of a trading range. 48, another bull bar. Looks like it closed one tick below yesterday's high, so we're probably going at least a little bit higher. And there's no selling pressure, and so there's traders buying below. This is a micro channel all the way since down here, bar 40, so probably buyers below for a second leg. Bull breakout through yesterday's high. Traders want to see follow through. Bulls want to see follow through. Bears are hoping the breakout fails and is disappointing. But even if there is a bear bar on 50, this rally is so strong that it's probably going to get a second leg. Follow through 50, small bar, but it's a bull bar, good for the bulls. Still a small pullback trend, and this is really a spike. There's been no pullbacks. So probably going higher, buyers below. 51 almost outside up. We tested near the low of bar 50 and then rallied. 51 is a little climactic, and it's possible that bulls see a bar like 51 and decide to take some profits because it's now possibly leg 1, leg 2. We're not quite at the leg 2 measured move, and traders will draw it in different ways. But the point is, this is big enough to be symmetrical, considered symmetrical with this leg. Now you're getting 51. So there's a couple ways to look at it. You can see this breakout here, pause, breakout, pause, breakout, pause, another breakout. It might be 4 buy climaxes, and then almost outside up 51. That will attract some profit taking. 52 going even higher, testing very close to the leg 2 measured move, expecting profit taking, but again, price is truth. It does not mean you can sell to initiate shorts. But if you're long, this is getting a little bit climactic, testing resistance, and with the overall context, we were breaking out above yesterday's high. We're probably going to come back and at least test the high of yesterday. Pause bar 53. It's a high one, but late in a second leg rally. Even though it's a micro channel, probably not great to buy below, and probably sellers above. And then outside down 54. So the market rallied pretty strongly on these last 2 bars, but it's late in a rally, late in a leg 2, above yesterday's high, which was expected to be resistance, and very close to a leg 2 measured move. Then we paused, and then everybody got out of their longs. 54 is a big enough surprise for the bears for a second leg down. But we'll probably pause or pull back before the second leg down. 55, we went a little bit lower and then pulled back. We're testing the low of bar 53. Bulls, this was a micro channel, so bulls did buy below 53. That was a reasonable thing to do, but they got trapped on 54, 55. Now 55 is coming back to test a low of 53. That low becomes resistance. And you can see we bounced on the resistance on 56. 56, it's a small bear doji, probably sellers above for a second leg down. 57 traded above 56, and there were sellers above. There was a bad stop order buy. The market's probably converting into a trading range. At this point, you can call it a triangle. We're getting higher lows and lower highs. The range is contracting, and we're above yesterday's high, where we're expecting breakouts to fail. We have a bull breakout, which had consecutive bars. It's good for the bulls. We're pulling back. We're probably going to test the high of yesterday, maybe test the moving average as well. As far as selling below 57, You can argue it's a lower high double top with 54, but it's a trading range bar in the middle of a trading range. So probably buyers below 57, not a very good signal bar. 58 more sideways, another trading range bar, probably sellers above and buyers below, but the buyers may not come in until a little bit lower. We are expecting a second leg down. We've had a pullback, we're going sideways, we may have to get that second leg before the buyers come in. Selling off on 59, testing lower, testing the moving average, maybe testing, coming close to yesterday's high. We'll probably get there and see what's there, and the bulls are hoping that yesterday's high becomes support. The market tries to break below it again and fails, and then this becomes a two-legged pullback in a bull trend, and we continue to rally. The bears are hoping what happened over here happens here, where now we have a bull trend, very tight channel, and now the bears are getting a trend line break, and then they're hoping we accumulate more bars sideways to down, get a test of the trend's extreme, and then get a major trend reversal. 59 is a bad stop order. Bad to buy above it, probably sellers above. But there's probably buyers below. It's two legs down in the trading range with support below. We broke out above yesterday's high, which was expected to be resistance. So some traders sold here, got trapped, and they're looking to exit on the retest. Plus we have the moving average support. And then 60, we found buyers. Two-legged pullback to the moving average, possibly in a bull trend. At this point, the market might be in a trading range, but there's probably buyers above 60 for at least some sort of rally because it's two legs down in either a bull trend or a trading range. Bears will look to sell higher rather than sell above bar 60. Inside bar 61, so bears prevented the buy from triggering, and it was a decent buy setup, so that's actually a sign of strength by the bears. But now 61 is a low one, sell signal bar, low in a trading range at support, probably buyers below 61. 62 outside up, but it's a small bar, and even though it's an outside bar, you're expecting it to be a trading range bar. It's a bull bar closing on its high. It's a micro double bottom at support. Overall trading range, probably testing a little bit higher. So rather than sell right above it, probably sellers above. 63, we paused, went sideways. It's a trading range bar. We've had a couple of legs up, sideways to up. The bears hoping this may have been all one leg, two-legged pullback, and then we continue to the downside. The bulls probably buy below 63. Betting it's a bad low too, low in the trading range. Continuing higher on 64, but the market is obviously in a very tight trading range here. I mentioned earlier, it's a possible triangle. Different ways to draw it. The market's getting squeezed. We had a wider range over to the left, and we're getting tighter and tighter. At some point, one side is going to get squeezed out. Again, the bears hoping this bull trend gets broken, the trend line gets broken, and the more bars that go sideways, the better it is for the bears. The bulls hoping it's simply a bull flag, and this sideways leads to a breakout to the upside. Bear breakout 65, but still inside the triangle. Not a major breakout of anything, and a sell vacuum test of support. Might go a little bit lower, but there's probably buyers below. And then 66, about the close. 66 is attempting to break out of the triangle, but it's minor, and the bulls still need follow through, and the reality is it's a bull bar high in a tight trading range. There might be sellers above. 67, we're getting big down, big up, big confusion. Sellers on the close of 66. Now we have 67, a bear bar closing on its low after maybe 3 legs up. 1, 2, 3, testing resistance. The bears hoping it's a low 3 that leads to a breakout. Again, the bulls just hoping this is an overall maybe triangle bull flag that leads to an upside breakout and trend resumption. But you think about what happened here, what we're getting after this rally The bulls did get a break out of yesterday's high, and that's good for the bulls. But then look at this, all the way from here, bar 53 to 67. This is disappointing for the bulls. This looks more like a tight trading range than a bull trend. And that's good for the bears, because at this point the bears have a trend line break. Here's the bull trend line. It's broken. We're going sideways for many bars. We've been sideways for at least 10 bars, maybe 12 bars. And the more bars that get added to this, the more the breakout direction becomes in balance and becomes 50-50. Probably sellers above 67, and it may go a little lower, but there's probably buyers below. It's a tight trading range. Small second leg for the bulls, 66, being a big enough bar, strong enough bar for a second leg. We got a minor second leg on 68. We rallied on 66, pulled back, rallied on 68. Bulls who bought the close, they got trapped. Disappointed with 67, they used 66 or 68 to exit the close of 66. Second reversal down on 68, but it's a doji, not ideal for the bears. And then bear breakout 69. Now the bulls see 3 legs down. 1, 2, 3. They're hoping it's a wedge bull flag. But again, it's similar to what was happening over here for the bears. Lack of selling pressure. Where's the buying pressure in here? We're getting very small bars. Nothing very special. Nothing that is clearly stronger than the bears. The bulls are not able to get consecutive bull bars. And because it was a bull trend line break, this is good for the bears. Inside bar on 70. Probably sellers above. Not a good buy. Not enough buying pressure. The bulls want a better signal bar, probably going at least a little bit lower. 71, another bear bar. Some traders will argue 1, pause, 2, pause, 3. So there's a micro wedge here. There's a bigger wedge here. And the bulls hoping this is support. But my concern with that argument is the higher time frame context and the fact that there's probably more sellers above yesterday's high, and we're still hanging out above yesterday's high, but this follow-through is disappointing for the bulls, which is characteristic of a trading range. Maybe we have 2 large legs up, testing high in a trading range, and then we disappoint the bulls and come back and test lower. Market went sideways enough here and down enough here that there were traders selling above here who got trapped, and this red line will be a target. 72, it's a bull bar finally, so probably buyers below. As far as buying above, it's not ideal. I think you can buy above it. Betting consecutive sell climaxes, 3 legs down, but the overall context would really concern me because I am expecting there to be a failed breakout above yesterday's high. And then 73, bear breakout, testing the prior swing high here. And it's a big enough bar to get a second leg down. Even though it closed fairly weak, there's a big tail below the bar. You think about what happened on 73. You had bulls buying below lows, hoping it's a wedge bull flag, buying the high of yesterday, the blue line, and then you get 73. So if you're long at the high of yesterday and then you get 73 and you're all the way down here, you're really disappointed with your trade. And if the market pulls back, you're probably going to use that as a gift to exit your position and look to buy lower. Strong enough breakout for the bears to get a second leg down. This became an endless pullback. The bulls were hoping this was strong enough to lead to a second leg up, and we ended up just going more sideways to down for many, many bars, and it became an endless pullback. Now we're getting a bear breakout of a bull flag, which is a surprise. Typically, you get bull breakouts of bull flags, and we ended up getting a bear breakout of a bear channel. That's a surprise, and surprises get second legs. And then we fell further on 74. 74, some traders will view it as 2 legs down because of the rally intrabar on 73. We sold off, pulled back, sold off again, So there might be support below here, but the reality is this is big enough and strong enough down for a second leg, and this is probably all just one leg and one breakout. So we're probably going at least a little bit lower. 75, more selling. We have now 3 consecutive bear bars, 2 of them being, well, they're all uniform in size, 2 of them closing near their lows and with little overlap here. So bulls are getting trapped. It's a very violent sell climax, testing prices to the left. Coming very close to the low of bar 33, strong enough down, of course, for a second leg. Sellers above 75. 76 going a little bit lower. So now traders will see leg 1, pull back, leg 2, pull back, maybe leg 3, testing support, probably at least bounce here, but not expect any major reversal here. And then we fell a little bit lower, but we're finding profit taking. This bull bar is due to bears buying back shorts and taking profits, not so much bulls aggressively buying. If you think about the overall market cycle, we had a bull breakout here, a pullback, the start of the channel phase, and then a bull channel. We know that channels evolve into trading ranges, and we know that the trading range could come all the way back down and test the start of the channel, the bar 11 low, and that's where bar 77 tested. We don't need this. So what about buying above 77? As good of a bull bar as it looks, the bull body is small, and the reality is we just saw a leg 1 bear breakout. So there's probably sellers above, scaling in higher, and buying above 77 is not ideal, even though it's possibly low in a trading range. Better to look for a second reversal. 78 testing lower. Now we have a micro double bottom, but 78 is a bad buy signal bar, probably sellers above for a second leg down. Inside bar 79, low 1 short, probably late in the breakout phase, probably going to pull back further, but nothing to buy for the bulls. Inside bar 80, going more sideways into the close, and then 81, another sideways bar, inside bar. For always in today, when did it become always in long? Look back in real time. I said this wasn't great yet. It was good for the bulls and bad for the bears, but it wasn't until here that it probably became always in long for me, the close of bar 6. And then, of course, all through here, the market never became always in short, even though you can exit below a bar like 25. I'm not even sure if it triggered, or a bar like 22. You can exit longs below, but then you can buy again above a bull bar like 26. And then this is not enough. This is not enough to be always in short. Bulls are buying this pullback. We're still always in long, but at this point the market might be in a trading range. But then the trend resumption was stronger than the bears wanted. There was supposed to be a major trend reversal set up here, but it never came. There was not enough selling pressure. So still always in long. And then I became concerned with bar 51 and 52 being a little climactic, probably going to attract profit taking, and 2 big legs up, breaking out above yesterday's high, expected to be resistance. And so it might be, maybe it's aggressive to say this, that it's always in short based on context, but at this point I'd rather be flat. I don't necessarily want to be short, but I also don't want to be long anymore either. And then probably always in short on the close of 74, and then we continued to go lower. Stop order trades today. You could buy above 4, bull breakout and follow through. Buy above 6. Not ideal to buy above 7. It's a trading range bar, but you could buy above 8. You could buy above the first pullback, bar 11, high 1. And then bull breakout 13, closing on its high. Buy above, buy the close, 14, 15, 16. Another high 1 on 18 or 19. Not as good as 11, because now it's 2 legs up, higher in the range. And then it became more two-sided in here. Not great for stop orders. And then as far as selling in here, also not ideal. I'm not sure about any stop order shorts in here. You could argue it's 3 legs up, and you could be aggressive and sell below these bars, but you're selling trading range bars, and you can sell below 29, and you need a good entry bar, and you did get it on 30. But you have to think about your premise and what you think the market's realistically going to do. And you know it's probably not going to come back and test the low of bar 1. You know it's probably a minor reversal. And then still always in long, you can buy above a bull bar, closing above its midpoint, 34, and then 41, 42. High one here, not ideal, maybe a little challenging because you're high in this range, but keep in mind there's not enough selling pressure for a major reversal. You can always exit below a bear bar, closing below its midpoint, which never came. Up here, second reversal below 57, not ideal because it's a doji, but this was strong enough down for a second leg, so you could enter here for that second leg down. Tight trading range in here, not ideal. Maybe 3 pushes up here, low 3 below 67 or 68. Now you have the micro double top, the retest of the 66 close. Some traders will sell below here, and then you could sell below 74, sell the close here or here. And that's about it for stop orders. For limit order trades today, I forgot to mention you could sell below bar 3. I don't think that was the worst trade in the world either. For limit orders, bull breakout, buyers below the first pullback, so you could buy below 10. Strong enough rally here. Buy the first pullback, you could buy below 18. And then some traders will sell above this high one, 18. It's aggressive, maybe not ideal, but if you did and scaled in higher, you would have made money. Bad low 2 below 21, you can buy below, but now it's a trading range. Limit order market, sellers above bars, buyers below. Over here, strong enough breakout for a second leg, and it's a low 1, 35, you can buy below it. Low 2 here, I don't think it triggered below 39, below. Actually, it did. If you sold the close of 39, you could have gotten filled. And then up here, buy the first pullback, but one never came, and then it became too climactic to buy below 53. Not ideal. High one above 55. Not ideal because the bar is pretty strong, but then you get 56, and you could sell above that bar. 55, not good to buy above, but you could buy below it, and that would have got triggered over here. Limit order market all through here. Sellers above bars, buyers below. Sellers on the first pullback here, but one never came. And then where do we go Monday? The market's starting to go more sideways. I'll probably show the daily chart, but I want to show the last 3 days here. It's a very wide trading range. Here. I just want to show these. Big up, big down, big up, big down. Even though the swings are wide, they're really not trend days. They're really these big swings within trading ranges. So I expect more sideways. But I'm a little more bearish because we've had consecutive buy climaxes on a couple of charts, the weekly chart, the daily chart. This is the daily chart. You can see we went above the high of yesterday and then sold off into the close and sold below the midpoint of the day, closed there. So it's not the greatest sell signal bar below this bar. It's a bull close, but we'll probably start to go more sideways and eventually to the downside. Test breakout points like this outside bear bar, this red line, test the moving average, but I do think the upside is limited, and if we do get above today's high on Monday, there's probably sellers above. As always, feel free to leave questions in the comments for me. Include timestamps for any question specific to this video. And with that, hope everyone has a good rest of their night. Thanks for watching.